What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, Tesla, Nvidia, Netflix, and JP Morgan. We're going to give you all the support and resistance points that you need for these stocks, and we're also going to talk about the strategies that we plan on taking on them. That way you know exactly where we plan on entering, taking our stop loss, or taking our profits. So let's go ahead and get started by talking about SPY, and we're going to do so on the daily candles. We always like to start with the daily time frame because it gives us an idea of where the overall market is trading. So let's look back as far as January 2023, where we can see that markets traded at a low of around 375. Since then, we moved to a high of around 418.30 on SPY, pulled back to 380, but notice on this pullback, we did not make a lower low. The markets made a higher low, which is an indication that we could be setting up for a reversal back up. So now the question is, will we break above the previous high? If we break above the previous high and hold that level, that means the market could be making a higher high for the year, and we could be setting up for a much larger upside rally. Now, last week we saw the market move higher based on new inflation reports. We got the CPI and the PPI reports showing that inflation is cooling off. It's actually hit a 2-year low around 5% for March. So this is good news for the market because it could mean that the Federal Reserve will pause their rate hike cycle. So the Federal Reserve already indicated that they will be likely slowing down their rate hikes, and that explains why we have been rallying so hard for the last few weeks. So if that is the case and they do indeed stop their rate hikes, the market will see that as very good news and we can push even higher. If we do so, then we may see a short squeeze rally move us all the way towards 425 to 430. Now, apart from inflation, we also saw earnings from banks last week. Remember that markets were still feeling the shockwave of the Silicon Valley Bank and the First Republic Bank fallout. So many investors and analysts were expecting banks to miss on earnings. However, to everyone's surprise, JP Morgan, Wells Fargo, and Citigroup all reported better than expected earnings, and we can see that they jumped on Friday with JP Morgan closing 7% higher, which is why we actually have it on our watch list because we do expect it to push even higher from here. So now that we know that banks are doing better than expected and they are alleviating investors and inflation is cooling down, let's talk about what we can expect for the week ahead, and then we will dive into our watch list. So in the week ahead, we have major earnings from companies like Tesla, Netflix, and American Express. These are great companies to pay attention to because they give us an idea of where different sectors are performing. Tesla, being a large leader in the electric vehicle sector, will give us an idea of how the electric vehicle sector is doing, and it will likely drive other stocks within the same sector up or down with it, depending on how it performs on earnings. So if Tesla beats numbers, it may push companies like Rivian up. Netflix, if it beats on numbers, then it may push companies like Disney because they own a large portion of Hulu and Disney Plus. So if Netflix pushes higher, then Disney may feel that sympathy move with it. American Express gives us an idea of where consumer credit is. If consumer credit is very high, then it gives us an idea that consumers are using their credits to survive. So these are all different companies. When you look at their earnings, don't just take it at face value. Make sure you really think about it. Think about other stocks in that sector and how you can formulate trades around different stocks after you receive numbers from major companies like this. Earnings season is a great time to make a lot of money, but you have to know how to trade earnings properly. If you don't know how to trade earnings and you'd like to learn, we offer a full course. Our course teaches you all of our strategies, and they are very effective when it comes to earnings. If you want to register for that, use the link in the bio. So now let's talk about our watch list for the week. We're going to start off by talking about Apple. Apple has been one of the strongest companies on the market for the entire year. Last week, we saw it dip from a high of around 167 to a low of around 160, and it bounced right at its 20-day moving average for the first time since mid-March. The last time it came below this level, the stock quickly recovered back above this blue line, which is the 10-day moving average, and it saw a multi-week rally that took it to that high. So now we saw the stock pull back once again to that level, and it quickly recovered back above it with strong buying volume, which could mean that we're setting up to push higher. Let's talk about some levels that we're focused on. If you're looking for a bullish breakout on Apple, you're going to need a breakout above 167 for the stock to move to a price target of around 170 to 171. If you're not familiar with our strategy and you have never seen our videos before, when a stock breaks above a resistance point, that resistance point should automatically turn into a support. So once Apple moves above 167, it's safe to enter calls or long the position, and then you want to place a stop loss just below the resistance, which is now considered to be a support. So if we get into Apple at the 167 breakout, we'll set our stop loss around 166, and we will wait for the stock to move higher to our price target, where we will cover the full position or we will take profits on half the position. After the stock breaks above 171, assuming that it does, we will move our stop loss from 166 to around 169, which is below the next resistance point. So remember, every time a stock breaks above a resistance, that resistance should turn into a support. So if the stock breaks above 171, the resistance will move from 167 to the support of 171. The next price target we would have for Apple above 171 would be around 175 to 176. So we would take half our profits around 171 and the second half of our profits around 175 to 176. Now if the stock fails and it moves lower, we will need the stock to break below 156 for it to move to a price target of around 150, and the second price target here would be around 143 to 144. Just like the upside move, the downside move can be played. You can play puts or short the position. Here in this case, if the support is broken, then that support will automatically turn into a resistance. So if you wait to play puts on the stock and you get into puts below 156 for a price target of 150, your stop loss should be just above 156 because that support will turn into a resistance once the stock moves below. Now moving on to our next stock on our watch list, it's going to be Tesla. Now Tesla has earnings this week, and Tesla is one of the companies that has actually been moving down while the market has been moving up. So while everybody thought that Tesla was getting ready for a very strong upside rally when they released their delivery numbers, Tesla actually took a downside hit, and it's been seeing a lot more selling than buying in the recent week. So if Tesla does not hit its numbers on earnings, then we can expect the stock to move lower. But if it does hit its numbers, then we can expect it to move higher. Nobody really knows what the stock will do, but we can take a look at some levels to trade it off of. So let's go ahead and take a look at Tesla, and we're going to look at it on the hourly time frame here, where we can see that Tesla has been consolidating and it has been giving us a lot of mixed signals, no real breakout or breakdown for the last week. The stock is still trading way below its 208 breakout resistance, so if you are looking for a move on Tesla, you can potentially scalp it at a break of 186.50 to a price target of around 191 to 192, but don't expect any real upside move until it breaks above 191.60. If it breaks above that level, then Tesla can move to a price target of around 204, but the real breakout is going to be at 208. Now, if the stock moves lower and it breaks below 176, then we do have a very aggressive downside price target of around 162 to 163. Tesla's daily candles aren't telling us much, but it is trading below the 10, 20, 50, and 200-day moving averages. The only moving average support that it has from here is going to be the 100-day moving average. Now, when a stock is trading below many moving averages, it does take a lot of power for it to move above them. So it will need to report very strong earnings for the stock to move higher. We will likely only watch Tesla from the sidelines during the entire week until they report earnings. After earnings, we may apply our earnings strategy to them because it can be very profitable on a stock like Tesla. The next stock on our watch list is going to be Nvidia. Now, Nvidia, just like Tesla, has been a little more on the boring side. The stock hasn't really given us really large upside or downside moves, and that could be because the stock has been rallying for quite some time now and it needs a period to cool down. Now, unlike Apple, Tesla did not move higher on its 20-day moving average. Looking at Apple's chart, we can see that when it dipped to the 20-day moving average, it quickly recovered back up, but Nvidia unfortunately failed to do so and it broke below the 10 and 20-day moving averages, with Friday ending below the 20-day. So if you are a bullish trader and you're looking at the daily candles, you're going to need Nvidia to recover back above this blue and purple line, which are the 10 and 20-day moving averages, for it to potentially move to retest 280. Looking at Nvidia on the shorter term time frame, we can see that Nvidia has a resistance at 270, and the stock will need to break above that level for it to move back into favorable bullish territory, and then the next price target from there would be around 280 to 283. 282.50 is going to be the true breakout point for Nvidia because that is the highest point that it reached in the recent weeks before getting sent back down. If the stock does break above 282.50, then it can move to a price target of 290. Now, Nvidia has a downside support at 258.60. If it moves below it, it can move to 252. You can choose to take on puts or short the position below those levels, but we were waiting for a break below 245 for us to really get into puts. As long as the stock is trading above 245, it is still considered somewhat bullish. Remember that a strong pullback after a very strong rally that Nvidia has had is completely normal, but we don't see the stock's downside selling action picking up unless it breaks below 245. At that point, we would consider a short or a put position down towards 233 to 235. The next stock on our watch list is going to be Netflix, which is also reporting earnings this week. We will likely only watch Netflix from the sidelines until they report earnings, and then we will apply our earnings strategy to them. Netflix here in this case has resistance and support points at 350.70 and a support at 330. It has been kind of a boring stock for the last few weeks, but it will likely get a lot of action now that earnings are coming up. The stock will need to break above 350.70 to move to a price target of 363 to 363.50. If the stock breaks above that level, then our next price target is going to be right around 373 to 374. Now, the downside price target below 330 is going to be around 321 to 322. If it breaks below that level, then it's going to move to 312 to 315. Notice that Netflix, both on the top side and the downside, has very strong and aggressive price targets, and that's just because Netflix has been consolidating for a few weeks without movement now. So when it does finally get that breakout or that breakdown, it's going to move very sharply, just so as it did so here. You can see it consolidated for a number of weeks before the stock saw a 2 to 3 day rally that took it from around 310 to a high of 337 in just a matter of 2 days. Netflix is notorious for very strong upside or downside moves, so if you do catch the right trade, then you're going to make a lot of money. Last but not least, our last stock on our watch list is going to be JP Morgan. JP Morgan enjoyed a very strong upside move last week after they reported better than expected earnings along with other banks. We can see that volume has not been this active since the bank turmoil of Silicon Valley Bank when all banks moved lower. So this is the first time that JP Morgan sees this much buying, and it moved above all of its healthy moving averages. We can see that it's trading above the 50, 100, 10, 20, and 200-day moving averages. So now that JP Morgan has moved much higher, we can potentially take a trade on it. So if you're looking to trade JP Morgan, our primary resistance and focus is going to be 139.50. It is considered to be bullish anywhere above 137.65, and that's because that's where the stock was consolidating. We can see that it bounced above that 137.65 level multiple times before closing higher on Friday. So below 137.65, the stock is still considered bullish, but it may lose a little bit of its momentum and take longer to break out. But as long as it's trading above that level, then we can expect it to move higher. The stock will need to break above 139.50 for it to move to a price target of around 141. And the second price target above 141 is going to be around 142 to 143. Now, if the stock moves below 137.65, which was this support here where it bounced, then it can potentially move towards the 134.90 mark, which is its second bounce support for the day. So on Friday, we can see that JP Morgan dipped to a low of 134.90 to start the day, and then it continued to push higher. That sharp reversal above that level makes that a very strong support. So we would consider entering puts or shorting the stock if it breaks below that level, and we would take puts down to around 132 to 135. A stock that makes this strong of a move, however, after earnings typically does continue rallying higher, so we are leaning more bullish, but we are flexible with our strategy depending on what the market gives us. So before we wrap up, I'd like to remind you guys that it is earnings season, so things are about to get pretty volatile. If you are looking to trade earnings, please keep your positions small because nobody really knows what earnings will bring. Earnings may shift us much higher or they shift us much lower if companies miss on earnings. Please don't forget to subscribe and like the video if you guys want to see more. Thank you so much. Bye bye.